So you guys might wonder why every day I go through the economic news when I'm basically a real estate channel. Well, did you realize that housing plays a huge role in our economy? If you think about housing and when in the construction of a house, look at all the labor and raw materials used in that one product, a home. That's why it's such a big part of our GDP and a big part of our economy. So I talk about the markets because I want you guys to figure out if the markets are really good, the economy is really strong, well, the housing market's going to be strong. If the economy's weak and things are really bad in the economy, well, the housing might suffer from that. So in today's video, I want to start going over the news for the day. And then we're going to break it down. Is it fact or fiction, or is it a bunch of hype? Let's really dissect the news so you guys can figure out for yourselves how to really dissect the news when it comes to you and you can dissect it. So let's go without further ado. Let's get into today's news and kind of break down, is it fact or fiction? I'm going to give you the realities of all this with it. So the first thing we're going to look at today is the headline news. Oh, what's going on here? I got news, CNBC News or NBC News. Well, let's go through this. I think I got to scroll down. It'll get rid of it. There we go. Okay, so the first thing, and I'm just pulling this up. I haven't even prepped this. Biden to meet with congressional leaders on debt ceiling as default looms. Whew, that sounds scary. Graphic video spreads on Twitter following Texas shooter and SUV incident. Okay, here we go. Here's that really great informational data I love. Texas mall shooter ranted against Jews. Driver who rammed SUV into migrants in Texas is charged with manslaughter. I'm tired of this news. Okay, so let's get to the next thing. The stock market. What's the stock market looking at? Stocks fall as investors await inflation data and debt ceiling progress. So let's really dive into that. Is there really inflation? You know, what's coming on inflation? Tomorrow, we're going to have a great beat on that because we have the consumer inflation numbers coming out tomorrow. And then on Friday, we got the producers inflation coming in. But the debt ceiling and inflation. So let's just break these down real quick. The debt ceiling, here's what you find when you look up this. Biden to meet with congressional leaders, Biden to meet with Kevin McCarthy, Biden GOP lawmakers not budging as debt ceiling meeting conveys. Pressure grows on Biden on the debt ceiling. So has the U.S. ever defaulted on its debt? Well, you don't have to look long for that. And it's no. So every so often, especially when the House and the Senate and the government's divided, you're going to have this big tizzy and you're going to they're kicking the cans back and forth and back and forth. Because why, guys? Next year's an election time. So now they got a jockey to say, well, remember last year when we had the debt ceiling? You voted against it and so forth. So they're going to use this to jockey their position. But guys, there will not be a default. Okay, take that off the table. The next thing is banking. Is banking an issue right now? And we're going to move our way over to inflation. I got one gauge. I'm going to show you the Chicago Mercantile Exchange and how they're the hedge fund people, the futures market, what they're going to do with interest rates. It's really interesting, and I'll give you the link down below. But we're going to continue on. Concern over banking crisis reaches levels unseen since 2008. Between 2007 and 10, there was about 400 and so banks failed. Okay. And it was because they had faulty loans on their books. And those faulty loans were mortgage-backed securities. Okay, I won't say loans, they're bonds. Mortgage-backed securities, they were buying these because Moody's was stamping this junk as AAA, so people bought into that. Banks all over the world were buying into it. When the subprime mortgage business crashed the housing market, all these banks went down. What's causing this time? Well, basically the Federal Reserve acting too fast. They raised rates. Did you realize raised rates 10 times? Since January of last year. Okay, they did it way too fast, and this is causing banks not able to react on their assets in time. So there's not going to be a banking catastrophic events going on, but all you need to know is right here. Unless you have gobs of money in the bank, I don't know about you, but I don't, you're covered for $250,000. So just make sure that the bank you have your money in is FDI insured. Don't worry about it. And if you got more than $250,000, God bless you. But spread it out. Okay, so the next piece of this puzzle we want to go is, what is the futures market telling us about where the Federal Reserve is going to take rates from here? So we go over to this, and you guys asked for this, and I said, hold on, it's coming, because they added another category in here because we're in levels we haven't seen in decades. So right here is what the futures market is telling. This is what's saying the federal funds rate, the futures, This is a Chicago Mercantile Exchange. You just saw that when I opened this up right here, Chicago Mercantile Exchange. You go down through here, and what you're going to do is when you go to that link, just hit over here, probabilities, right through here. Sorry, my mouse is a little testy today. Probabilities. And this is telling you what the federal funds futures are saying. What the Federal Reserve is going to do at their meeting, the probabilities, in June, July, and September. Okay, in June, they're expected to have the federal funds rate at 500 to 525. Where are we today? 500 to 525. So that's it. What they did is they added this category in here. There is a 16% probability that their Federal Reserve is going to raise rates at the next meeting by 0.25%. Okay. But then from there, and that probability is way off the charts, it's not expected to raise rates. And then you're going to see in the July meeting, stand steady. And then from there, a pivot. And they're expected to reduce rates through the rest of the year and next year. So that's that part of it. The economic news for today, there's really nothing. You're going to see here on Tuesday, there's the economic outlook. So we're going to skip past that and just say, guys, if you enjoy my videos and you want to find out more about the economy, about real estate, because I think I know the schools are failing us. So if you want your kids educated on economics, love to have them join my channel. If you're a college student out there, love for you to join my channel. Check us out on Wednesdays. We have live events. You guys can ask questions. You can do that there. And if you want to check out more of my videos, all you need to do is go over to YouTube and go right up and check out Dan Frio. And I am right there. You can check me out right through here. Click this, and there's over 2,000 videos here, folks. 2,000 videos to teach you guys everything about real estate and the markets and everything you need to know. So thanks for watching, guys. God bless. If you like my videos and you find them educational and entertainment, please give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. Thanks for watching, guys. I'll see you tomorrow. Bye-bye.